JJ the CPA here. Hope you're doing well. Let's talk about the documents you're going to need when it's time for loan forgiveness. All right, made it easy for you. Go to jjthecpahelp.com. You're going to enter in no email address, no information. All right, jjthecpahelp.com. I've got a page over here called Forgiveness. Okay, and right here I've got a documentation list that is straight from the law. Okay, so what are we looking at here? We are looking at documentation verifying the full-time equivalent employees on payroll and pay rates for periods described in which is the time period, the 8 weeks, right? So payroll tax filings reported to the IRS, state income, payroll, and unemployment filings. That's an and, not an or. Documentation including canceled checks, payment receipts, transcripts of accounts, or other documents verifying payments on covered mortgage obligations, payments on covered lease obligations, and covered utility payments. A certification from a representative of the eligible recipient to make such certifications that the documentation presented is true and correct, and the amount for which forgiveness is requested was used to retain employees, make interest payments on covered mortgage obligation, make payments on covered rent obligations, and make covered utility payments, and other in documentation the administrator determines necessary. So where you provide no documentation, it says there in F, there'll be no loan forgiveness, and no later than 60 days after the date on which a lender receives an application for loan forgiveness under this section from an eligible recipient, the lender shall issue a decision on an application. So the thing to know is that this is on 100% of all companies, sole proprietors that got a loan or got a PPP, and you're going to need to prove your expenses. So what I'm telling my clients is canceled checks, bank statements, and the actual receipts or the invoices or the bills. Now, maybe and hopefully we will get some further clarification from the SBA on the definition of utilities and things to that effect. Okay. Now we did get some, if you go to my website, JJ the CPA, you go to PPP, okay, and then down here, okay, we had some SBA guidance on 414. This is on the main page. So if we open that up, I went through here, okay, and then from there, basically, here are, I made a list, but this is what it indicated for the individual or the sole proprietors, I should say. So proceeds for the PPP loan can be used for owner compensation, employee costs, mortgage interest, business mortgage, interest on the mortgage. Okay, so business obligations, interest on an auto loan for the vehicle which you use for business. Okay, for businesses, it would be the auto loans in the business name, business rent payments, business utility, gas you use driving your business vehicle. Now, I want you to note that is for the sole proprietor. Okay, so haven't yet seen if that will translate at all for the business owner. Big difference here. Okay, interest on a loan in the business name is covered. Okay, no matter what the business loan is. Now, gas in vehicles that are owned by the business, I don't know about that. It seems likely, but by golly, that's a very, very, very minor amount of money that we're talking about here. So we're going to need to wait for further guidance. But that was from that list right here that I put together on my website is directly from the SBA. Language is directly from. This is from the law, which is what the SBA is basing all of its information off of. But here's the thing. So I've had a lot of questions about are utilities and it's naming everything under the sun. So right now what we know utilities to be is the basics: water, electric, gas, telephone, internet. Okay? Now let's be clear here. Okay? We're going to talk about sole proprietors, the self-employed. They don't have a separate business. Okay? No. If it's in your personal name, no. Personal mortgage, no. Personal phone, no. Personal internet, no. Personal gas, electric, water, personal garbage, personal cable, no, 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 no. Okay? Look at the list that I just showed you. Okay? That's for the sole proprietor. Now, for the business, okay? Right? So separate entity, separate filing. We're talking about a C Corp, an S Corp, a partnership, right? All those can be LLCs. When we see utilities, all we can conclude now is utilities. What are our traditional utilities? Now, I'm assuming that the SBA will come out with further clarification, but utilities, since the beginning of time, okay, is gas, water, electric, okay? What comes on those bills, right? Some fees and some taxes, maybe the garbage, whatever's on those bills, right, that you get from the city in essence, or that provider, okay? Not cell phones, not on either side, self-employed or the business. Landline, okay? It's your telephone bill, who's your telephone company? It's that bill in that business name, okay? Your internet, does it include cable? No, I don't think so, based on what I've been reading, okay? And so we're talking telephone, internet, gas, water, electricity, okay? Utilities. Now, wait a second. What if you're a doctor and you have medical waste? No. What about janitorial? Nope. Office supplies? Nope. IT expense? Nope. What about IT repairs? Nope. Maintenance outside? Nope. Lawn care? Nope. Janitorial? No. Let's see, what else? Let's see. The shredding service? No. What about dues to my carbonite to do the backup? No. What about IT dues and expenses? I got to pay someone to monitor my internet every month? No. What about online QuickBooks? No. Okay, those aren't utilities. Okay, look up a definition. In fact, you know what? When in doubt, right? So let's go here. Define utilities. Okay, what are utilities? What defines a utility? Something useful to the home, such as electricity, gas, water. Well, it says cable there. Maybe, I doubt it though. Examples of utilities, okay, brakes, gas, caps, steering, wheel in a car. Okay, no, that's a different kind of utility. So just hear me. It doesn't include on the car, okay? Don't get excited here. So when we're talking about utilities, okay, we're talking about the basics. We're talking about rent, okay? Now, what if you have a leased vehicle in the business? I don't think so. Will it ultimately be the case? I guess. It'll be up to the SBA. And then what's interesting is, the banks may have their own interpretations, quite frankly. I mean, they're supposed to base it off the SBA, but it seems as though the banks are making some interpretations on what counts as sole proprietor income. I'm seeing things that are included that, related to rent can't, related to Schedule E can't, S Corp can't, distributions, no. Okay, SBA came out on the 14th, talked about partnerships, and if it's self-employment income, 14 or box 4, on a partnership, it can be applied for up at the partnership level, not distributions, okay, not box 1 of a K1 of an S Corp or a partnership, okay, but banks have done it. Banks have used it, okay. Well, when it comes time to forgiveness, I mean, you didn't even give the loan in the proper manner. You didn't give it based on anything that was actually in reality. I don't know how it gets forgiven for starters, But the other aspect is that there's no strategy here, okay? The SBA kind of made a stern statement on the 14th, which is said, this is not meant to be a windfall. This is to pay for basics. 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 What are basics? What commonly every business would have, okay? Basic utility, basic rent, okay? If you're paying a separate CAM charge, there might be a bank that says, hey, I want to see your lease because of the payment you're paying in rent. I need to know some of that's to CAM. What's CAM? Okay, that's the share of the common expenses, right? Common area maintenance, right? No, that's not included, okay? Now, if it's all wrapped up in the rent, you can't break it out, you don't know the difference. But here's the thing. What this is meant to be is you pay your normal expenses, okay, when it's talking about rent. It's going to cover 8 weeks. You could pay 7 years worth of rent in that 8-week period. All that's going to count is 8 weeks worth of rent, 8 weeks worth of utilities, 8 weeks worth of payroll. Okay, so maybe you have a different period of time of when you paid or this or that. It's like, well, but you know, right when I got it, I mean, I might end up having to pay 3 months of rent because I have to pay it early and the landlord and this and that. It's going to cover 8 weeks of rent. That's it. Okay, it's going to cover 8 weeks of payroll. It's going to cover 8 weeks of utilities. Okay, now I'm sure if it's, you know, on average, here's my utilities. I paid 2, you know, 2 electric bills. Okay, probably on average, that's covering 8 weeks. Okay, but if you hurry and pay an extra electric bill, it's not going to count, right? So there's no strategy. There's no creativeness here. It's not what it's meant for. What it's meant for is Grandpa gave you $20 to go to the movies. Okay? You go to the movies. You buy a ticket, some popcorn, slush, you know, like a Coke Icy, some licorice, go enjoy the movie, right? Grandpa's not going to go, well, you know, I'll pay for a ticket, but only, and I'll pay for a slushie, but only a medium, right? Basically, this is, what are you normally paying, right? I mean, think about this, right? Rent's different across the country, right? It's not putting in an amount. It's just, what do you normally pay, folks? That's what's covered. 8 weeks, go cover it. Okay? Whatever you got, cover it. Right? No more than 25% of what you borrow can be used for these items of utilities and rent and interest. It's 8 weeks worth, not what you can gobble down before the end of the movie. Okay? It's not meant to be, well, I went ahead and bought some extra licorice. I couldn't eat it, but I went ahead and bought some extra, and now I got it in my pocket and I can eat it later. No, that's not what we're talking about here. Seems like I'm hearing, you know, kind of the goal is, I got to get it to forgiveness. I got to get it to forgiveness. How do I get it to forgiveness? How do I get it to forgiveness? Oh my gosh. You know what it is? You spend it on what you're normally spending it on. What's left over is you just pay it back. Okay, you can either pay it back immediately or you pay it back over time. Okay. Now, is it like, well, I want to make sure I'm using it all, you know, I want to make sure I can use everything I can. I need the money. Yeah, there's the definitions. You're not going to be able to try and invent a new kind of utility. You're not going to be able to invent a way or a sob story why you had to pay an extra amount of rent. Doesn't matter if you're behind and in that time frame you paid for 7 months worth of rent, only 8 weeks is going to count. Okay. I got another video. I'm going to go and talk about the payroll aspect. When you see this calculation, there's no way to strategize anything. Okay? Nothing. And the whole head count, the dollar amount, all it does is reduce your chance of forgiveness. It doesn't increase your chance of forgiveness. So all I can tell you is, what are you normally paying on payroll? There you go. Someone quits, they're on unemployment. You know, and the questions are, is like, well, I mean, do I have to rehire? No. Okay, you get to the end of the 8 weeks, you're like, well, this is what I got left over. You're going to have to pay it back either then or within 2 years. Okay, well, but if I used it for payroll, exactly, but what was your average payroll? Okay, it's on your application. Okay, it's literally on your application. What's your monthly payroll? Okay, what's included in that? right? It's the gross pay to the employees not to exceed 100K per employee. The employer paid health insurance, the employer paid retirement, and state unemployment tax. Okay? So if you're like, well, how much payroll can I spend? Or how much payroll do I need to spend? Okay, well, first of all, you take what you borrowed times 75%. That's what you need to spend on payroll. So when people say, well, can I give someone a raise? What if it should just really represent your payroll. Okay, so yeah, if in January and February you had to downsize your staff a little bit, if you think about it, this is an average of 12 months. Okay, so it's like, well, wait a second, I got to spend at least 75%. You're like, how do I do that? You take the number on your loan times 75%. That's what you need to spend on payroll. Okay, no, it's not to raises. Right? This is what needs to get spent on payroll. But what happens if you don't? Nothing. You just pay it back. What if you spend more? That's okay too, but how are you going to spend more? How's that going to happen actually? Okay? You're taking your dollar amounts and you're spending it on payroll. There's no reason to create payroll. Okay? Why would you create payroll? Okay? If you normally have 8 people, 7 people are gone, and you replace one so you still have 8 people, then there you go. Well, what happens if someone leaves and I don't have the money and I don't spend it? Then it's forgiven. What this is meant to be is relax, go to the movies, buy yourself a ticket, whether it's a matinee, whether it's regular show, whether it's, IMAX, Dolby, reserve seating. Here's some money. Go to the movies. Right? You don't need to be on the way. Now, well, wait. Now I got to spend it also. Like, can I get a supersized electronic or supersized licorice? Can I get a supersized Slurpee? Well, what do you normally spend when you go? The goal is not to try and figure out a way to get it all forgiven. The goal here is to pay the expenses that you normally have. Well, I just want to make sure I don't get in trouble. You don't get in trouble, okay, if you're spending it on payroll. It's like, well, what if I spend too much? How's that possible? You only borrowed X amount of dollars. Okay? So pay your rent, pay your utilities, right? It's what you already had in play. You can't even create new stuff. It's what was your lease? What were your utilities? What were you committed to on February 15th? That's what you then can use. Well, what if my lease is getting ready to come due? Okay. Well, if your lease is getting ready to come due, it's going to be based on what you were paying in rent on February 15th, the lease that was in play then. Okay. There's no reason to run 788 scenarios here. Okay. What's your rent? Done. It's 8 weeks worth. It's 2 months. Done. What's your utilities? There's the bill. I don't know how you control it or use more. You're going to go turn on the air up extra high to make sure you're spending more on utilities? What's the interest on your loans? It is what it is, right? What's the health insurance? It is what it is. What's the employer match? It is what it is. Okay, your salaries times the match you're doing, it is what it is. What's the payroll? It is what it is. What do you need for the company? I've had a few questions, and it's like, well, what if all my employees are on payroll? So, do I still have to pay them? What if all my employees are on unemployment? Do I still have to pay them? No. Well, it's not going to get forgiven then. So you got some money, and at the end of the 8 weeks, you go, all my employees were still on payroll, so here's this money back. Okay, so let's just say all the employees are gone. Okay, so you get to borrow the money. Well, you can use up to 25% of it for the rent, utilities, the interest, right? If they're on furlough and you're still paying the health insurance, well, you can include that as part of the payroll cost. So really what you need to do is just, you spend it on what you need to spend it on. Okay, this isn't money anything other than for payroll, utilities, rent, the interest on your business loans, the employer portion paid amount of health insurance and retirement, and your state unemployment tax. We're way overthinking this. We're way overthinking it. The goal is not full forgiveness. Okay, that'd be like, I have a bowl, I have some cereal here, and I'm going to pour the cereal, but it can't all fit in my bowl. I didn't get a bowl big enough, so I guess I'm going, oh my gosh, I better hurry and eat this, and I better hurry and eat this. What is the point of this? Okay, let's just really calmly think about it for a second. Go look at your application. Literally, go look at it. Okay. You defined what the monthly payroll cost is. That's what you have to spend in those 2 months. End of story. Well, what if my payroll's not that? I mean, this is what you got. What if it's more? I mean, what if in January I beefed up? Pay everybody. The max that you're going to get to include is just in the loan. Okay. The head count and the salaries and all that good stuff, it's not going to help you. It's only going to hurt you. So then it's like, yeah, but what about the head count and what are we doing here? Okay. What do you need? Okay. Just step back. Okay. First, it's not even your money yet. It's not your money. It's the government's money. For what? Paying payroll. Well, everybody's not here. We're not open. Everybody's on unemployment. Well, then you don't use the money. Well, then it won't be forgiven. Correct. What am I supposed to do? You hand it back. I mean, at some point you're going to hand it back, whether it's when it's over or within 2 years. Well, my employees are going to make more on unemployment. Okay. Government didn't lose from the standpoint they went and they collected on unemployment. You didn't use it all. Here you go. Okay? During the 8 weeks, this is what you have to spend it on. So if it's still sitting there after 8 weeks, you do have the ability to pay it back over 2 years. So then you would have the money. So spend on what it is. Don't make it up. You don't have to say, oh, you can't go, or if they quit, I got to replace them. Right? We're thinking of, if it's not forgiven, we're in trouble. If it's not forgiven, we did something wrong. Here's how you did something wrong. You fired everybody, which is fine, okay? And then you went on vacation with it. You went and paid off credit cards with it. You went and bought supplies with it, okay? That's not what you're supposed to use it for. So if you don't have it, meaning those expenses, then you don't spend it. All right, so I'm going to go through a calculation here, and I'm going to show you how you can't strategize it. It is what it is. And there's enough parameters that come into play at the end of the period of June 30 that just spend it on what you got. You don't know what's going to happen after the 8 weeks anyways, right? So it's this. What do you need? Spend it on that. We don't need to be worrying about forgiveness as long as you're just using it for what is intended. Okay? For what you had in play at the time of February 15th. So if you had 10 employees and now you need 15, okay? Pay your 15 employees. Pay your 15 employees, okay? And 10 of them, in essence, are going to get covered from this loan. Okay? You got to pay all the health insurance. Well, in essence, 10 of them is going to get paid. But all you need to do is this, okay? Pay your rent, your utilities, your mortgage payments. Right? You have to have money from somewhere else, most likely, to pay for this stuff anyways. Just pay the stuff. Just pay it. I'm just chuckling because it's just that easy. Just pay the payroll that you need. Okay? If someone quits and you need to replace them, replace them. Well, what if I replace them and I've got to pay $2 more an hour for that person? Well, what you borrowed times 75%, you replaced them. There's a de minimis amount here. Can I give myself a raise, to make sure? Can I do that because all the employees are going to leave? You can. Okay, but then you're going to sit before the bank and you're going to go, here's my payroll costs. And they're going to say, okay, so everybody left. There was one person and now they got paid this. And now you're looking at head count. See what I'm saying? It just doesn't work. There's head count at the end. Okay, one person that got paid more, you got a head count, you're doing a 3 comparison head count to the prior year. There's no strategy here. There's no strategy to be had. It's not even like a strategy is immoral or a strategy is unethical. I'm not saying that at all. I'm just saying it ain't going to work. What's going to work is if you as the owner are paid 80 grand a year, you're going to pay yourself 80 grand a year. Okay? And if you have these employees over here and one of them leaves and you replace them for basically about the same, then that's what you're going to do. Okay? So if you're trying to figure out how much can I spend on payroll? What did you borrow? It's right there on the application. What did you borrow times 75%? That's what needs to get spent on payroll. Well, everybody left, so I need to give myself a raise so that I spend that much on payroll? No. Just saying that that's the forgiveness expectation, that if people are gone, you can't make it up by paying yourself extra. So just relax. Spend it on what you got. Right? Well, how much do I mean, look at the application. You define there what you spend every month on payroll. There you go. Right? I mean, meaning it's like, well, how did we come up with the payroll? It's right there on the application. How much do I need to spend on payroll? Take what's on the application times 75%. Okay? You're going to just kill yourself. You're going to kill yourself. Just, oh my gosh. Here's the employees. Okay? Well, what if I'm getting 75%? Does that mean I pay the employees 75% of what they normally make? No. Because the salaries and the payroll cost with the insurance and the employer match and the SUTA, right? You took that times 2.5. Okay? It's not you got 2 months times 75%. You got 2 months times that factor, or 1 month in essence times that factor, which means you got 2 months of payroll plus some extra to cover these other things. Well, what if I don't have rent and I don't have utilities and I don't have loans? Can I spend it all on payroll? No, not for forgiveness, right? I mean, you've defined your 2 months. So I'll do a calculation, but you're going to see there's just no strategy required or involved. You spend it on what you've been spending it on. Okay? That's it. Now, if you don't believe me and you want to spend it, then do it. Okay? Then just do it. Then do it. You want to give people raises? Do it. You want to pay yourself more? Do it. You want to give yourself a bonus? Do it. Because at the end, it's going to go, here's what you got times 75%. Okay? Let's see your payroll costs. Okay? How many employees? What was the head count? What was the head count here? What was the head count there? What was the head count there in 19? We're going to compare it. What was the head count here? What was the head count there? What was the dollars that was spent? Okay? And then you're dividing that stuff out. You're comparing it. It's all going to come out in the wash. You ain't going to fool one person. They're not going to go, oh, good job. You were supposed to spend 60 grand on payroll, and you spent 60 grand on payroll. Oh, all's forgiven. Okay? They're going to look right under the sheets and go, oh, okay, so 60 grand was 10 employees. They're all gone. 60 grand for one employee. And then that's where that ratio is going to come into play based on the head count. They really thought of everything on this thing. Okay? So if you want to come up with a strategy and come up with your own spreadsheet on a quote-unquote strategy to get full forgiveness, okay, then do it. I mean, I still don't understand the point of all that. Pay for the payroll that you need. Pay the rent and utilities and the interest and the health insurance on what you need. You need 10 more employees? Yeah. Hire 10 more employees. Well, how's that going to work on my forgiveness? Spend on what you need, because the math isn't even going to be fully done until the end. You follow? I mean, you're going to spend what you need, but then there's an equation at the end. Okay, if we're mid-April, you're going to be to mid-June, and then you're going to see what's my head count at the end of July or at the end of June. There's not a way to strategize your way out of this or into it, or it really doesn't make any sense to me, because at the end of the day, if you didn't use it all, you just hand it back, whether it's then or within 2 years. You got this. You don't need to worry about it. Just spend it on what you need. JJ the CPA. You've never met a CPA quite like me. It's late. Not punchy tonight. I'm relaxed. Why? Because I got my PPP money. Thanks, Jason.